And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we bring you where the action is in the broader markets. And certainly we do have a lot to cover as usual. Let's take a look at our agenda. First up, we're going to take a look at where the markets closed, and everything that we cover today, of course, is always with an eye for helping prepare you for not only next week, but we want to look even beyond that. So from there, we're going to take a look at some of the top headline news that took place this week, and then what is driving these markets. We've seen some relatively extreme moves, and we'll get into that not only within the broader markets, but certainly some of these individual stocks. Also take a look at some of those recessionary stocks that there are these global growth fears that are continuing to bubble up. So let's get started with these headline news. Earlier in the week, we did see that service sector index fall. This is all about that service industry, hospitality, and otherwise. And bad news for the economy is good news for the markets. That's the general phase that we're in. Of course, we want those interest rates to continue to potentially decline, and a falling or contracting economy would do just that. Consumer confidence fell just a bit, but it was all about inflation and those recession fears bubbling up. We did get third quarter GDP, the first strike on that, and it did rebound. This is after 2 consecutive negative quarters. We did rebound 2.6%. However, not as exciting as one would anticipate. That rebound is being attributed to the shrinking trade deficit. So not so much about growth in the economy here in the US. Unemployment did tick up, not a whole lot, but it was up a bit. And then from there, we did see personal income as well as personal spending. That did rise, as did consumer sentiment. So the good old US consumer, as resilient as always. But those numbers, not any of them were surprisingly alarming, just that general sentiment that there has been an ability for consumers to somewhat look past the high prices that are taking shape out there. Also, core personal consumption expenditures, and this is a widely viewed Federal Reserve inflation gauge, and the report did come down a bit. However, it did show that inflation remains elevated. This came out on Friday, and for those of you that watch the markets closely, we'll get into it. We did and are seeing a pretty decent rally today, despite that high print on inflation. As you may know, the Federal Reserve is all about trying to dampen inflation by raising rates. Normally, a high print on an inflation number like this would push the markets down. But from here, we're going to take a look at what is exactly driving these really impressive moves here in the broader markets. So let's go ahead over. Take a look at the S&P 500 here. We're looking at a daily price chart. The S&P was up almost 4% on the week. So from here, we are going to take a look at some of those outside momentum indicators as far as the position of this S&P 500. And for those of you who haven't, you can certainly take a look at my show from last Friday, where I identified what is called a follow-through day. This is an Investors Business Daily, Bill O'Neill metric that has identified the market bottom going back over 100 years. And I'll talk about the characteristics there. Also, in my bi-weekly MEM Edge report, we go much more into detail as far as what that signals and whether that bottom will last, or will it move more into a short-term rally similar to this July into August period. But let's take a look at where we are now. The S&P did close the week above this 50-day simple moving average, and that is quite constructive simply because this moving average can act as resistance, as can all of these moving averages. Earlier, certainly 2 weeks ago, I was talking about the fact that the S&P 500 was consistently finding upside resistance at this 21-day simple moving average. Last week's break above that was the first signal that we could conceivably trade higher along with that follow-through day. So now that we are up above this 50-day simple moving average, quite constructive price action. We can also see the RSI trending upward above that 50 in positive territory. Stochastics are also positive above this 50 and trending higher. Our next area of upside resistance is going to be this 200-day simple moving average at 4113 for the S&P 500. And you can see we rallied right up into that 200-day simple moving average in late August before the markets faltered. Certainly a lot of other factors, not just technical, that drove this retreat, but certainly that rally phase was earnings driven. So we're in a rather similar mood at this point in time. So let's go ahead and drill down beyond the markets. You always want to be aware of where that relative strength is taking shape, and then also sector rotation. I've mentioned many times in the past the relevance of getting that industry group correct, and then from there choosing the best underlying stock. And the reason there is because studies have shown that group and sector affiliation is attributable to almost 50% of your stock price movement, either to the upside or downside. So here we have those 11 sectors in the S&P 500. I've added a relative strength indicator, and then I'm sorting these sectors in descending order. From here, this 2-month daily price chart view is going to provide us with intel on where that strength is. That's going to be in this upper left quartile, and then your weaker areas down in the lower right quarter. Now, this is something I do on a very regular basis, not only to tell me really where that strength or weakness is on a given day, but also on the prowl for that rotation where these industry groups are moving from these weaker areas on up. And I'll share some of those areas with you. But let's just take a look here. Energy up here at the forefront. As a group, it did underperform the S&P this week, but it is still remaining in a very confirmed uptrend. There are underlying stocks that are outperforming this 2.5% increase that we've seen in energy. And I do have at least, 3 names on my MEM Edge report that are having a nice week. From here, let's take a look at industrials up here. And this particular industry group was the top performer, up 6.6% for the week. Very impressive movement. We can see the group has broken back above this 200-day simple moving average, that RSI trending upward. And then here I am using a MACD, but it is trending right into this positive area. So we talked about what is driving price action, why industrials are up here at the forefront. And I will tell you, it is all about earnings. So as we move forward, I'll share with you some of those areas and names in industrials, as well as these other areas that are residing up here in the stronger quartile. Here we are, consumer staples, second best performer, 6.2%. Right up here at that 200-day simple moving average. It closed pretty much just inching a little above that. So this is another area where earnings are coming in. These consumer staple companies, those that have been able to increase their pricing, yet continue to see loyalty as it relates to buying their brands among consumers. Those are the big drivers here. And this is something I've talked about here. Certainly with my report, I did write an article here. You can access it at the top of your dashboard. And I talked about one major company that we'll take a look at as we move forward that did report. But let's look here at the RSI trending upward in positive territory, and then the MACD just entering into positive territory. So lots of vibrancy there. The next area, let's just see if I can help capture this, but we can see that healthcare is up here at the forefront. almost 5% gain here. And take a look, gap up, and then a nice move up above. I talked about this in my Wednesday MEM Edge midweek report, what was driving that price action and the bullish new trend that is taking place in healthcare stocks. And then we'll get into some of the bigger drivers in this area as well. But I do want to get to the fact that if you look up at this forefront here, you can see as it relates to some of these newer areas, certainly industrials, but staples and healthcare are very defensive, but they are also areas that perform well in periods of certainly uncertainty such as now. So putting money to work in certainly these areas would have a little bit less risk than some of these higher growth and certainly more volatile. So let's take a look at technology. It did outperform the broader markets, and this is another area that near term has turned somewhat positive. XLK is the ticker symbol. It now is up above this 50-day simple moving average. RSI positive, trending upward. And then this MACD, we're not quite there yet on that positive metric, but certainly headed in the right direction. We'll get into the bigger impacting names there as well. And then also taking a look at potential rotation. Two areas I want to share with you that have had certainly XLRE had a significant week, up over 6%. Take a look. This is an area that has been really beaten down. If you were to look at the sector performance over the last 3 weeks, if we have time, I'll get into that. And the fact that it is now experiencing this nice downtrend reversal. This is all about earnings. Certainly these REIT stocks, they have funds from operation, it's their version of earnings. And we can see that the RSI up here is turning positive, and then that MACD heading in the right direction. Let me just go ahead and share with you stochastics instead of the MACD. That is what I use for industry groups as well as for the broader markets. And then I will share with you why. So here we are with XLRE, and you can see, and we'll take a quick look at XLK as well, that the stochastics are in positive territory. The reason I use stochastics for these broader sectors as well as the broader markets is the fact that these groups, you will see a nice move in the group, but the underlying stocks are going to move quite a bit faster, and that MACD works perfectly. The stochastics are faster moving momentum indicator, so they will help you get in earlier into this potential sector rotation that is shaping up. I'll share with you a couple of names here, but this is also all about these companies coming in well ahead of estimates, and they are being rewarded with some nice upside price action. So down here at the lower quartile here, communication services, all about Meta, down 23% this week, and Google having a tough week as well. So let's move on. We want to take a look at some of these sub-industry groupings. Same idea with that 2-month daily price chart view. And these are areas that can really help you get your arms around where the biggest price improvements are taking shape, and then also have a good idea of how the charts look. So up here at the forefront, take a look. The Dow Jones Industrial Average. And this is an index that has been, certainly last week, it outperformed as well, up 5.7% for the Dow Jones Industrial Average. Now, of course, many of you may know that the name is not indicative of the underlying stocks in this group. So from here, I will go ahead and share with you the underlying 30 components, and you can see where this superior strength emanated from. So we can see it is now up here above this 200-day simple moving average with both your RSI and MACD in positive territory. So the Dow has really been a place to be. I talked about healthcare up there in the forefront, turning bullish midweek. Here's one of the reasons. This is IBB, the NASDAQ Biotechnology ETF. Super nice break up here above this 200-day simple moving average. All about earnings, particularly some of their heavyweight names. I will share that with you as we move forward. And from here, we can also take a look at another area that is really on the rise. This is small cap stocks up 6% for the week. And this is really quite constructive. If you look at this chart, you can see this nice double bottom and then higher lows as the stock, or the index in this case, is advancing. Now, small cap stocks will lead out of a bear market, but we're not quite there yet where we can call a bear market bottom. But it is constructive to see these small cap stocks really picking up the pace, unlike other periods. So we'll see if they're able to have a nice continuation rally. Momentum now up here in positive territory in these stocks. From here, let's go ahead and take a look at some other areas that are picking up. We can start with XRT. This is the retail ETF, and not super positive, but a nice break here up above that 50-day simple moving average. And this is despite a deterioration. Amazon down 13.5% this week. But there are other areas of retail that are picking up, and I will share that with you. So also, we do need to take a look here at these bank stocks, not quite back up here above that 200, but up 5.5% for the week. Another area where superior earnings reports, certainly above reduced estimates. That's what we are seeing with these earnings. We have to be kind of clear on that we're not in this amazingly expansive period of time. Quite simply, analysts had revised earnings estimates down to a point where corporations coming in with okay numbers are easily beating their estimates, and in line, investors are bidding those stocks up. Let's take a look at the yield on that 10-year. It has been super relevant for this market in the sense that a rising interest rate environment is negative, particularly for growth stocks. And you can see the 10-year yield in this case retreating back. Now we are still elevated. We're at that 4% level, but certainly quite a bit lower than we were, and heading in the right direction with those interest rates. We'll see, hopefully that can last. And then from here, one of the weakest areas, and this is a good thing, this is that volatility index, the VIX, also known as the fear index. I talked about this in the midweek report, on the lookout for a break below that 200. That is constructive if we can, and we did get back here below that 200-day simple moving average on this volatility, down here at about 25, almost 26. So good news here, as a declining volatility index is constructive for further upside to the broader markets. So from here, let's go ahead and jump over to those Dow components. And I will share with you, I talked about the index being up almost 6% for the week, 30 stocks in here. And I do again have this 2-month daily price chart view, descending order. So let's take a look at each of these stocks that are up here at the forefront. Caterpillar, Gap up, huge gains, Merck, McDonald's, Visa. And what do these companies have in common? They all came out with earnings this week that were really quite good and pushed these stocks higher. IBM also came out with earnings. We can take a quick look at this stock in the sense that it's given a staid IBM name, of course, a standard blue chip. We had this gap up. They reported their earnings about 2 weeks ago, and a continuation rally. I'm going to pull up a larger chart here, because when you are looking at names such as IBM in this reversal, oftentimes using historical precedents as your guide. This is December period, this significant rally that took shape, and what you will want to be on the lookout for in the sense that if that rally fizzles. So you will want to look for a negative RSI, MACD, and a break below support. So let's go ahead back and take a look at these Dow components again, and I will share some other characteristics here. Caterpillar, again, I talked about that gap up, and then you can see the continuation rally that took shape. From my work, this rally that we are in now is a bear market rally, counter trend. So I'm going to drill down a little more into an intraday. Some of you may not be comfortable with that mode. It's not something I revert to or go to very often, but it can be helpful in periods such as now. So here's a 15-minute price chart, we are looking at that gap up. And then oftentimes, of course, you'll think that you did miss the move, but you can keep an eye out for a continuation rally. This is Thursday's gap up. And then again, today on Friday, we opened quite nicely. And if we have a nice continuation rally, it will mean this move back here above these moving averages are your signal. Your MACD still in positive territory. I'll see if I can get you what I would consider a better example, but we can even on that intraday, let's go ahead and use a 1 hour price chart, which can help smooth out some of that bumpiness, and the same principles apply. Gap up, huge volume, pullback, and then today's open indicating a nice continuation rally, always provided that those broader market indices remain constructive. So as we move forward, RTX, Raytheon also came out with numbers, and this was surprising because the numbers were not particularly great, but again, enough to get investors excited, back up above this 200-day. One other name, let me see if it where it lands on this list. I do not see it, so I will show you outside of this as far as some of the moves into these defense-related stocks. So let's go ahead and move on, because as always, you want to be aware, I did talk about XRT, Walmart on the move, continuing higher. This is a theme, hopefully I have time to get into, but within retail, it's all about these discount retailers that are experiencing the nicest gains. So down here in these weaker areas, Microsoft came out with numbers, disappointed, traded lower, closed the week down around 2.5%, a pretty nice recovery today, up 4%, but we are still in a very confirmed downtrend with Microsoft. And then some of these other names, Boeing came out not as constructive as the other defense-related names, and Nike languishing. I talked about that theme as it relates to retailers. Quick look here at those mega cap stocks, because there clearly are the haves and the have-nots. Those down here at this lower quartile coming out with poor numbers and guiding lower. And these are the three names: Alphabet, Amazon, and Meta Platforms, all in very confirmed downtrends, not looking very good. Tesla's struggling. It was up for the week, but they also came out with disappointing numbers last week, so it's not there at the forefront. This is unlike Netflix, which is doing a lot in the way of restructuring. They have a lot of plans in place going forward that investors like, because it points to growth. And then Apple, nice break back above that, at least this 50-day simple moving average. So from here, I do want to share with you the NASDAQ composite. We didn't really get into that. It was up 2% for the week, certainly up about half what the S&P 500. Now, we looked at technology. Technology is a big part of the NASDAQ. It was up quite a bit this week, 4.2% for the technology grouping. However, we can see the NASDAQ struggling here. And this is all about those heavyweight FANG names that I mentioned: Meta down 23, Amazon 13. That's going to really depress and keep this NASDAQ as an underperformer if we continue to see that type of behavior. We will want to see a break above this 50. But again, those heavyweight names are really having quite the impact on this sub-industry grouping, while other areas are retaining. Biotech certainly are one, select retailers. But I do want to share with you, because semiconductor stocks, super mixed. Interesting that they are doing okay. There is one name today that was up quite a bit, bellwether name. But here we are with the semiconductor index ETF. You can see it's attempting to reverse that downtrend. It is up above that 21, but this is definitely a stock pickers area where you will need to know where to look. I'm going to get much more into that with my MEM Edge report, because when these semis get going, you want to participate. Software, another big area, certainly among technology, trading right up to that 50-day simple moving average, up a little bit less than the S&P 500 for the week. This is another have and have not area where there are stocks that are on the move quite a bit higher, and then other areas not so much. Now, I did mention that I would share with you some of the other names in these select areas that are moving to the forefront. And certainly, I did mention to you the defense-related stocks. We can take a look at Northrop Grumman, came out with numbers in a very confirmed uptrend here. But let's take a look at a stock that reported last week that really began the drive or move into these defense-related stocks. And this is Lockheed Martin. We can see that move upward. Let's go ahead and add a 5-day simple moving average. And you can see how helpful that can be, where a pullback to that blue 5-day simple moving average can be an ideal buy point. Some of the other areas that I did want to share with you, we talked about retail, and then I'll get into some of these small caps as well. But let's take a look at some of these retailers that are on the move. And these are going to be the top performers in the broader markets this week. First up, ROST. This is Ross Stores. And take a look at that gap up on this daily price chart into a base breakout. Very bullish behavior. RSI MACD trending upward. Ross Stores is very much in line with those stocks that fare well during periods of certainly high inflation, but also a recession, because you will see a move into these discount retailers. We talked about Walmart. TJ Maxx is another one in a very confirmed uptrend, trending higher. So really you can drill down into this group, Dollar Tree and Dollar General and so forth. And that is a theme that is taking shape, certainly among those retailers. And then also when we were talking about these small cap stocks, I did want to share with you what is taking shape, because very similar to the other indices, it's all about earnings. These companies are coming out with strong numbers and just really taking off. This is Applied Industrial Tech, AIT, and it's in the building space. That's been a particularly vibrant area relating to not only earnings, but then that move higher. So really lots in the way of strong momentum here. We can take a look at a couple of other of these small cap stocks that are breaking out of these bases and hitting new highs on earnings and coming in, as I mentioned, above estimates. Toro Company is another building related products, and you can see that very confirmed uptrend. From here, I do want to also share with you some other areas that are in that small cap space, and you'll see that if you can get in front of these names or really just stay on top of earnings in these smaller names. And I don't think I'll have time, but I will talk about this over the weekend in my MEM Edge report, how you can get in front of these stocks. Here we are with CBZ, a consulting company, came out with numbers 24% year over year. The group chart looks fantastic. Nice base breakout, hitting a new high. And then I believe I have time for one last stock here, and that's Booz Allen, another consultancy firm that came out with strong numbers. I can share with you right now, certainly these high volume characteristics. This is a stock that wants to go higher. It is seeing buying on heavy volume, but other metrics you will want to take note of is the momentum shifting into potentially an overbought position. So that's all I have time for this week. Everyone, I hope you have a fantastic weekend. Use that button below. I do have a special trial offer for my twice weekly MEM Edge report, and I look forward to seeing you here next Friday.